we've talked so much about the ability of AI to make individual workers more productive and to get more done with fewer people. Well, how about 100 million ARR with 52 staff? I mean, that is an efficiency that I think we never saw before, frankly.
All right, my question for you: Polymarket users betting on OpenAI's IPO,
okay,
and their valuation. It's got a little bit of valuation. They got a little bit of volume going on this one.
Yeah.
So what do you think? What are they going to go public at?
So you and I have
500 billion, 500 to 750, 750 billion. Did we do a bet on this already?
Jason and I, yeah, you and I did this. We set the over under at 1.25 trillion. And the reason why I wanted to bring up this Polymarket here,
I took the under.
You took the under. I took the over. Yeah. But what blew my mind was that the rising category of popularity is wagers between 500 and 750 billion, which is essentially flat from where they are now. This Polymarket is set up in such a way, Jason, that you can also bet that they won't go public by the end of next year. But that's going down as a wager, while other valuations for a pre-2026 IPO are going up. So people are betting more that it will list and less that it won't. And you could say, hey, isn't that bullish? Don't people then therefore think that OpenAI will be IPO ready? I think it's bearish, because if people are betting that it's going to go public next year at a valuation that isn't impressive, to me, that implies distress and a need for more capital.
It's also saying that it's not going to have an IPO by December 31st, 2026. That's the likely case, 67%, which that's problematic if they need to raise more money for data centers and they need liquidity.
Yeah. Well, you can say that as positive or negative depending on how you think about it. Are they going public because they're so strong, or are they going public because they're so weak and need the cash? You can kind of see it either way.
I think it's they need to go public because they're going to need to raise that money. They were going to raise 60 billion and their IPO was the whisper number.
Yeah.
Which is a lot of money to raise all at once. And they're going to need that 60 billion, and maybe they raise 100 billion. So not raising means they don't have $60 billion next year, which means they'd have to raise money from the private market again, which who's going to put money in and at what valuation becomes
Thrive
then the question.
Capital at any valuation, I think, is the answer to that so far.
I don't think so. I think at 500 billion, I don't know if they come back to the trough again. And they were buying secondaries from employees at that valuation. I don't know that they come back at the trough again. I think people are going to say, yeah, maybe at under 500 billion or at 500 billion they do, but I don't know who doesn't own shares in OpenAI besides the public, right? Public definitely will want to buy it because it's such an incredible franchise. But I wonder if, like, private market investors, how many more are left? How many more sovereign wealth funds that want to put 10 billion into this, $1 billion into this? How many Nvidias are left that want to put 10 billion into it or 5 billion into it, or certainly venture firms? This does make me a bit concerned. Yeah.
Can I draw an analogy? We talk about startups raising at a valuation that's so high, they become unacquirable, maybe in the $1 to $5 billion range. Is it possible to become so richly valued in the private markets that you're essentially uninvestable unless you go public?
Yeah, that could happen, where the private market investors, the last ones in, have, placed their bet, and the only thing left is retail and the folks who like to own public stocks, right? It could be hedge funds, it could be endowments, whatever, that want public market stocks that they can come in and out of. Perfect example would be Uber. Masayoshi comes in, pays a really high price. I sold some shares to him when it was a private company at that price. And then it goes public after that. And that was like a really interesting kind of dynamic, because who's left after Masayoshi-san? The public, right?
And who's investing in OpenAI in 2025? Masayoshi-san and SoftBank. Maybe that's an indication.
And Thrive is like the last investor before you go public, it seems like now. So I think this all, to me, says they're going public.
Launch is a fast-growing organization. We've got more than a dozen employees working with me here in Austin, and another dozen spread out all over the world. But there's so many moving parts when it comes to hiring and managing employees. There's the onboarding, of course, payroll. You got to pay them. And listen, I've got all these podcasts to do. I don't have time for payroll, benefits, HR, taxes, answering questions, nor do I want to hire a full-time person and then have them do 5 hours of work a week. No, I have the perfect partner, Gusto. They're the all-in-one payroll and benefit product that's built just for your small business. Easy to use, it's incredibly fast to get started, and it's designed specifically with remote offices in mind. And Gusto is not just giving you helpful tools, they're going that extra mile to keep your workers happy and keep everything running smoothly. And they're now offering level-funded health plans to keep your insurance costs down and on-demand pay to help workers get access to their cash faster without paying extra interest or hidden fees. So here's your call to action. We want you to try Gusto today. So we're giving you 3 months free when you run your first payroll. That's right, 3 months free, Free. That's my favorite price, folks. Go to gusto.com/twist. That's Gusto, Gusto.com/twist. What an amazing service and a partner, great partner.